everyone. Welcome to this session. We understand you're coming from hearing Jennifer Tescher and others speak, so we know we have a tough act to follow. My name is Lisa Servon. I'm a professor of city planning at the University of Pennsylvania, and I do a lot of research on consumer financial services. I'm thrilled to be here today, although a little bit sad that we're not in person. Some of the best times at the Emerge conference are talking to other people in the hallways and exchanging ideas, but we're hoping we can get a good conversation going with you all today. And I know you've been invited to add some, send in your equity, access, and closing the aid gap. Long before COVID-19, low-income communities and communities of color had insufficient access to safe and affordable financial services. They also had insufficient access to money, period. That situation has been exacerbated by the global pandemic. Our audience, you have the bios, so I'll just do a brief intro and then ask you to respond, you on the panel, to the following question to kick us off. First, we have Marla Blow, who is Senior VP at Mastercard Center for Inclusive Growth. Daniel Gorfine is also here. He is the founder and CEO of Gattaca Horizons LLC and an adjunct professor at Georgetown Law. And Dan Henry is president and CEO of Green Dot. So I'm going to start with one question that I'll kind of throw out to the whole panel, and then we'll get going. So here it is. The breakdowns in the system of getting aid to the people who need it most illuminates problems that we clearly need to address. What, in your opinion, is the most important thing we need to do to move the needle in terms of creating greater equity? I'm going to throw it out to you first, Marla, to get us going.
Sure, happy to. Thank you, Lisa, and thank you all. Great to be here at Emerge in this new format. And I share Lisa's sentiment on I have enjoyed having Emerge in person, but excited to be here in this structure as well. In terms of the distribution of aid and being able to reach people, we certainly have revealed the fact that we don't have structures that are set up for distributions writ large across the population by our government, and trying to turn the IRS platform into a way to distribute capital or distribute access to funds through a system that was never designed for it has revealed some real flaws. I'm encouraged by some of what I've seen on addressing, and at the center we think a lot about who's on the margins, and thinking beyond kind of the traditional bank accounts where the majority of people can be reached. But there are people for whom identity and the ability to go and transact is limited. And so finding ways to reach them by some of the novel approaches I've seen on creating card products that are themselves a form of identification, so that for people who are potentially homeless and having an address is a challenge, or some other part of their citizenship structure causes challenges for them. Not having banks in your neighborhood causes challenges, right? All of those factors made the part of the population that wasn't directly reachable a little bit larger, I think, than a lot of us expected. And so I'm encouraged by seeing things like one of the products in Mastercard's portfolio that's been enabled by some of the cities and working with some mayors around the country to enable both identification and transaction capability on a single form and on a single device, so that, for example, in Los Angeles, large parts of the population that are homeless were able to receive a grant from a program and a sort of grassroots effort in Los Angeles to enable them to receive those dollars. So there are some ways that some of our current products are being adapted that can serve multiple purposes and enable broader reach by those.
Awesome, thank you. Daniel, do you want to go next?
Sure. No, thank you. And it's great to join all of you virtually. And I'm going to pick up, I think, where Marla was leading off there. I mean, I'll talk a little bit in a second about central bank digital currencies, but before I even get there, I do want to double down on this concept of identity. I mean, I think during the crisis, there was a lot of talk about, the difficulty of getting emergency relief and funding to or underbanked individuals. Honestly, I think the reality and one of the biggest problems there was the identity issue. I mean, a lot of payment rails are capable of delivering funds. It's just a matter of, can we identify who's on the other end of that? And so it's been an area actually that I've been starting to look at a little bit more closely. And you start thinking like, we've got biometric information. We've got the ability to unlock, smartphones with our face. We can use fingerprints. Why not start thinking about ways that you can access government data, government information held in databases, DMV information, for example? If you sync that up through an API build, like, you should be able to start developing tools that would make it easier to onboard individuals, especially those that are trying to get kind of fast access to emergency relief. None of this, and I'm going to come back to this point many times, none of this is a panacea. And of course, there are going to be certain populations that it may not work for, but I think we have to take this from a few different angles. To that end, let me talk a little bit about CBDC, or central bank digital currency. I'm one of the co-founders of something called the Digital Dollar Project, which is a not-for-profit effort focused on exploring the potential tokenization of the US dollar. So to explain what I mean by that, this would be something that has to be run by the Federal Reserve or the government. But the idea is to allow people to use kind of digital cash in a digital world the same way you can use physical cash in the physical world. So while someone can go to an ATM machine and withdraw physical cash, the idea here would be the ability to actually withdraw a tokenized representation of a central bank liability. So the Fed actually issuing cash in a tokenized format. The way we've thought about this in terms of a champion model is that we would suggest running this largely through the two-tiered banking system. So you'd still rely on banks and other kind of financial technology intermediaries that may be regulated as money transmitters as one of the on-ramps to the system. But many of you may be then saying, well, I don't get it. How does that help with access and inclusion? Because obviously, if you're going through a lot of the traditional intermediaries, that may not be an immediate solve. So I think, just to throw this out there, here's the hypothesis. Tokenizing the dollar just overall could create a lower cost system, less friction, more efficiency, and just lower overall costs of operation. Then at the end of all this, an individual would have a digital wallet service essentially on a smartphone. And the hypothesis that we would love to test out is it true that a digital wallet service provider is a lower cost, more efficient and easier from an operational, technology, and from a regulatory perspective? Is this something that can be offered in a lower cost way than a traditional bank account? Is it more economically viable? If so, the ubiquity of smartphones makes this something that could come preloaded. People might be able to purchase smartphones and have options of digital wallet service providers, maybe married up with this digital identity component. And then you may be able to bring a significant number of currently un- or underbanked individuals into the system. I was looking at, and I'll stop in a second, but I was looking at one recent data point from Pew that about 60% of the unbanked have smartphones. And they noted that the inability to load cash onto a smartphone is a significant barrier. So I, for one, would like to pilot and test the idea that this type of a system where you're tokenizing the US dollar and offering a more ubiquitous digital wallet service may be able to help with aspects of inclusion and access.
Super interesting. I have tons of follow-up, but I want to get Dan Henry into the conversation.
Thanks, Lisa, and thanks for having me here. And Daniel, I think what you're saying, a lot of that is absolutely kind of spot on and right in line with a lot of the thinking that we're doing here at Green Dot in terms of, how do you make, you talk about access and inclusion and affordability. Think of everything, so many things that have been digitized that have then driven the cost of those items to zero. Photos, for example, music, all of these things. And so I think that banking falls in the same way. And if the more of it that we can digitize, the lower the cost will be. So if the piece of plastic as a form factor goes away, we may think, well, that's not a lot of money, that's $1, or it's a ton of money, because operationally to chase down a piece of plastic when lost or stolen, it's very expensive to support that on the back end. Dana, what you say about digitizing cash and currency, if you don't have to have armored cars and vaults and such to move this cash, that's a huge amount of cost that comes out of the system. I believe that but to me, the biggest cost to banking and to payments, and we see it here at Green Dot, is fraud driven by identity. Identity theft, confirming someone's identity. And I'm very optimistic and just strongly believe in the evolution of technology in terms of when you take the capabilities that what blockchain creates in terms of being able to really grab someone's identity and protect that. You combine that with most everybody now has a computer in their pocket, and we go forward a couple more years and we've got 5G speeds to those devices. I really believe, Daniel, what you outlined in terms of solutions around identity protection will really show through. And I think it's absolutely critical because if you look at just what's happened with the CARES Act, there was a lot of aid. I mean, I really goes off to folks in DC. There was quick action, as quick as we can expect with the system government we have. There was meaningful dollars put into the system, but there was also meaningful dollars stolen in various pockets and states because of identity theft and systems that weren't, as tight as they could be.
It sounds to me like you all are really excited about technology and different ways of using technology to solve pieces of this problem. Since we're talking about equity and access today, and Daniel, you even alluded to, like, it might not, there's this chunk of people who have smartphones, still people who don't. Some of those people with smartphones might not be super comfortable with having that device be also their identification. I wonder if you could all address just the issue of, let's imagine that we were to kind of push forward a digital identity platform, made that much more accessible to a wide range of people. Who does it work best for, and who might still be left out? In other words, like what part of this gap that we're talking about would still perhaps face challenges and obstacles?
I'm happy to start. I mean, look, first of all, I want to make one point about all this, because as we talk about technology, yeah, there's great opportunity. But also we need to be very careful and make sure that we're thinking about the right guardrails. I mean, as I listened to myself at the beginning talking about government databases and APIs and DMV information and facial recognition, I'm sure a lot of people were like, whoa, let's be careful. And that's right. I mean, so I think, first of all, you have to think very hard about what kinds of systems you're creating. I mean, we don't want to develop something where you've got kind of super databases that just hold all of this information, because that is dangerous. I mean, just from a security perspective, you don't want to have the ultimate honeypot of identity information. So thinking about design and how you do this in a way that maybe you can ping and query, yes or no questions from government databases. Does individual, X's social security match with this information? Yes or no? So you're not actually capturing and holding all of that privacy, that private or confidential information. I think that's important. So design is a big piece of this. Now, again, where I'm thinking about it maybe solves for a certain percentage of the population. I do think DMVs seem very logical to me. I mean, we actually have, think about what we do in the physical world. We take driver's licenses and compare photographs, right? Like, we have technology that's getting better at doing that same type of a thing. So if someone's able to query, a photo database from a DMV and match to the real-time scan on a phone, that's interesting. It's not going to be a solve for everybody, because not everybody has a driver's license. So, I'm very much eyes wide open on that. I think we can think about additional tech sources to try to verify identity. I think that's important. Domestic is going to look very different than international. So if we're focused on domestic populations, that's one thing. When you start thinking about kind of the global unbanked, I mean, you're going to have very limited sources of information. But again, that's why I'm wary of anything that tries to be a one size fits all solution, because I don't think that's going to be the answer. It's going to be a multiple different good ideas that hopefully help chip away at the problem.
Yep. Can I build on that too, Lisa, and just add that one of the big challenges that goes along with this is the theory around around access to the actual networks that power all of this, right? So having a smartphone and being in a geography where you have reliable quality access. And in a lot of cases, this is, the phone systems and the sort of wireless access is pretty solid. But when you start talking about rural parts of the country in the United States, even some of the neighborhoods within our major cities in this country, that can drop off. And if you're reliant on being able to transmit information back and forth in order to confirm your identity, in order to complete a transaction, you run the risk of that occasionally falling apart, right? And so as we think about technology creating access and creating equality in some respects, it also requires those underpinning systems to be really well established, and there are investments that we need to make as a nation, right, on extending broadband access to rural parts of the country. One of our grantees, the Center on Rural Innovation, has really highlighted the challenges of getting through this moment that we're in around shutdown for the pandemic. If you are in a rural community and you're trying to have this conversation that we're having right now via a virtual convening on a broadband access point, you can run into real problems. So this is obviously different from a transaction where you don't necessarily need to transmit as much information and have it be bidirectional in this same way. But the principle around ensuring that those systems are robust enough and equally distributed enough, I think, is also intrinsic to part of what you're saying, Daniel, on addressing some of this with these very powerful devices that we all walk around with and assume will be able to stand in for things like identity and exchange medium as a form of value exchange. There are assumptions underlying that are worth just pointing out. And that's why I wanted to add that here.
Thank you. Makes a lot of sense. Dan, do you have anything to add on this topic of equity?
No, let's move on to the next question. I think we've covered it quite well.
Okay. Well, I'm curious too about I'm thinking about when you think of identity, who gets to say what kind of identity gets used? I'm thinking about, I used to live in New York City, and or what kind of identity is acceptable. Marla knows what I'm going to say, I think. When New York City created its ID card, it was one of the first cities that did that, because there are a lot of people who are immigrants who don't have driver's license, so it wanted to create this official ID. And the three largest banks didn't accept it as a valid form of ID, right? So that to me was a really unanticipated obstacle between people, and those people who didn't have driver's licenses were probably more likely to be unbanked or underbanked, not being able to use that form of ID. So just thinking even about the connection between identity kinds of documentation, and the ability to use financial products and services. Do you foresee technology being able to kind of fix that or ameliorate that, or does that still give the corporate sector more power, right, in terms of deciding? And some might even have a little bit more of a sinister interpretation and think they didn't really want those customers anyway, right? But I won't go there.
So I'll jump in, and then I know Dan Henry wants to jump in on this one as well. I see you, Dan. One of the things that I think is coming, that I think is really interesting, is actually another form of identification, right? And another form of verification, which I expect will be some kind of health verification, right? So in order to go to a sporting event or a concert or to go to Emerge in some future years, we will all be potentially presenting some kind of verification of our health, right? Have we had COVID tests? Have we had it in the past? Are we potentially non-symptomatic carriers right now, right? All of those kinds of things. And how is that going to happen, right? And what will be the systems and the technology, and how interoperable will all of those be? So if I've done a test and I'm here in Maryland and Dan is out in California and Pasadena, are those going to be fungible? And how are we going to ensure that the same standards are being upheld, right? There's a whole new question about identity and about access and about who's going to be willing to accept somebody else's verification of health alongside the identity of my actual, name and person, there is a status component of this that I think we will start to see getting added here as we all contemplate how we'll re-engage socially. And that has dramatic implications across a whole host of dimensions. So I wanted to just add that to the mix because I think it's an interesting consideration.
Yes, Marla, I think you make a real interesting point there. And I think as painful as COVID has been, I think it really has forced, it's probably caused 2 years of migration, in 2 months in terms of different approaches. I mean, just look at this, for example. I mean, pre-COVID, we'd all be in the same city having this conference. Okay. I don't know if I will ever go to a conference again. This is great. I mean, add to that, and investor conferences and so forth. This is, it's so much more convenient. But so Marla, to your point of, one thing I think we probably all agree on is the power of passion around our athletic events in this country. So I guarantee you, if we have to figure out a way to identify everybody and identify their health so that we can have the Super Bowl, someone's going to figure that out. And those solutions that someone figures out, entrepreneurs are going to be able to apply those, I believe, to a myriad of different sorts of solutions. Mm-hmm. And so, yeah, I'm always very optimistic of where it's going. And we just, for those, back when I used to travel 4 months ago, I always sped through the TSA line, with my 2 fingers with the clear solution. And 15 years ago, biometrics wasn't possible because the technology wasn't there. And so, there will always be a fringe amount of customers that have a hard time getting the access, be it from technology or be it from their physical location, what have you. But I believe that as we continue to drive to serve the masses, the cost of these solutions come down. When we really, really close the loophole on identity theft and fraud, the amount of money saved by the institutions in terms of fraud losses will be tremendous. And I think we'll free up a lot of funds that will make it to where we can kind of, in a way, we can cost justify serving a small percentage of the customers who we can't serve in our current new technology, if you will. But again, I'm overly and wildly optimistic that, what has happened to so many industries in terms of digitization and democratization is coming to financial services very fast.
So one thing, given that I'm a Washingtonian, I have to bring up like policy and regulation, of course, but just one thing I do want to throw out there that I think would be very helpful is the idea of putting forward, more safe harbor regimes and maybe even like identity passporting regimes. And I'll explain what I mean by that. So during this past crisis, we had the PPP program for Main Street small businesses. Many of the biggest banks, for a variety of reasons, ended up closing their doors to the program pretty early on. There are many Main Street small businesses that were customers of those big banks. Now, there were many other banks that had availability, but did not want to onboard new customers because of some of the concerns around KYC and fraud. And to me, it's kind of nuts that we don't have a system that says, if there's a financial institution that has performed a reasonable check and used reasonable standards, why can't we passport that KYC verification to another institution where they can rely on some kind of a safe harbor that says, if you reasonably rely on somebody else who took reasonable steps, you can onboard much faster with lower risk of liability there.
Dan, and think about the flip side of that. There is a thing called the Check Systems Database that says if you are a consumer that walked away from overdraft fees, your information's in that database. And all the banks subscribe to that. and before they give you a bank account, they check that database. So I'm just kind of I do find it ironic that, we have figured out a way to create a database of information to keep people out of the system. But, wouldn't it be great if we did what you're talking about is say, hey, Marla, I know you follow this procedure to get Daniel an account. And so therefore you follow the same systems and procedures and you issue to him, whatever, this ID passport that we all collectively agree is now valid. So he can walk into my institution and I can serve him without, giving him the 3-week, background check.
Right.
So what do you think, Daniel? You mentioned regulation. Is it just because the regulatory environment is so fragmented and it's hard to get anything done
I think that there are global regulators that have been looking at this. I think Singapore took a shot at a passporting identity regime a few years ago and actually quite impressively admitted that the first round didn't go very well, but that doesn't mean that they're done. And so they're talking about a 2.0 for that initiative. I think, my big picture takeaway from this crisis has a lot to do with the importance of digital infrastructure in general. I mean, it's what's allowed us to be productive and resilient. The fact that we can even do this right now is because of different components of digital infrastructure. And so I think now it's heightening how important some of these elements are. Like, there's no reason we don't build the interstates, if you will, that will allow people to do all kinds of things from an economic perspective, from a health perspective, via technology interfaces. I mean, I think that it makes a lot of sense. So, we'll see, but we'll see if there's more urgency behind this. I think it's difficult because liability is a huge concern. And don't get me wrong, I understand the importance of KYC and AML and the regulatory and law enforcement interests there. But you do need to kind of measure the costs of the current system versus the benefits and whether you're really solving for huge risk. I mean, again, I'm thinking if you've got a Main Street small business that's an existing customer of, Wells Fargo, how risky is that to be having some kind of a quick solution so that another bank that's capable of serving the customer, is able to pull information with some type of certainty around liability exposure? Like, I don't think that should be incredibly difficult, but then again, maybe I'm too optimistic for a Washingtonian.
So I'm going to pull in a question from one of a member of our audience that's come up that kind of relates to this, because as we're talking about technology and we're talking about closing the equity gap, the access gap, there's almost a presumption maybe that people do have equal access to technology. And someone mentioned earlier that, if you were trying to do this in a rural area or in other parts of the world, many of us, I know every day I take it for granted when I can just kind of come to my workstation and log on and be productive and connect with people. I'm wondering if, and this is the question, whether your companies are doing anything to address the digital divide. That is something I think that even to me, I used to study the digital divide, and I was surprised with the pandemic to see how many kids, for example, are not able to log into class to connect with their classrooms and their teachers or get the materials they need. They don't have computers, they don't have broadband. So that's another issue I think that's come to the surface. Are your companies thinking about that and doing anything explicitly to address the digital divide in order to make these technologies work better for everyone?
So I'm well positioned around that, obviously, right? Mastercard has committed to the Center for Inclusive Growth and did so 2.5 years ago, really. And so we're pretty far down the path of thinking about what makes the digital economy work for everyone, everywhere, and what are the missing pieces that are dependent on where you happen to be. So that's about place and the economics of place and the infrastructure around place. And so while we are obviously not a telecom company, we do have the ability to engage and partner with other organizations that are actively engaged at the forefront of trying to solve for things like broadband access and all about access to all of the networks that power the modern economy, right? And if you think about the networks we're talking about physical and infrastructure type networks right now around broadband, but there's also virtual networks and the technologies and some of the solutions that we've been talking about here. Some of the concepts that Daniel was throwing around about about all, currencies and crypto and some of the opportunities to develop new systems and new networks. Those are all about networks, and the value of it is the distribution and the breadth of that network. And ultimately, that also suggests social networks play a role here as well.
Yeah, absolutely.
And thinking about how to get more people attached to all of those networks is very much part and parcel of what we've done at the center, and how we've allocated our philanthropic dollars, how we've allocated our talent and our time of Mastercard's people, where we do enable volunteer work, and in part in places where we've contributed Mastercard's actual products and technology in order to facilitate the development of these kinds of networks and the broader proliferation of the access of the kind of hooks that enable bringing more and more people into what we're describing as kind of shared prosperity, right? So we are, I'm in the philanthropic arm of the organization. Mm-hmm. The commercial side does work on this as well, but it certainly is front and center for the work that I'm doing right now.
Yeah, and I might add, in terms of Green Dot, we're not putting up towers and building digital highways, but what we recognize is that, utopia would be, as Daniel describes, we've all got, rock solid digital ID and all currency is digital. Well, that's, that would be great, but that's not reality. So, we have, Green Dot's money processing network, where over 100,000 locations in the country, Family Dollar, Dollar General, CVS, Walgreens, Walmart. So if you think about the communities where all Americans, live and work, and to your point, Daniel, the ability to put cash into the network.
Exactly.
So if I'm a working individual and I get paid in cash, or most of my, income is in cash, but I want to play in the digital world, how do I make that transition? And so for us at Green Dot, what we feel, is a critical role for us is, if you will, kind of making sure that the old world, we own a bank, we have all these 100,000 points of location where consumers can actually bank and move cash into these digital solutions and serve the digital solutions that, we believe are coming from lots of large partners here in the US.
Thank you. This is a little bit of a shift back to our earlier conversation, but I want to get another question in from a listener or participant who asked about developing countries that have implemented digitized cash through mobile phones and why that's not doable or happening so much in the US. Is there anyone who feels like addressing that question? Yeah.
So my first company, Euronet, gave me the exposure to international markets, and we were all across Central Europe, India, and Asia. And the listener might be referring to the solution out of Africa. Net, it's all, to me, it's all about legacy infrastructure. Okay? So when I first moved over to Central Europe, land-based lines were hard to come by. Well, cellular towers came and everybody had a cell phone, and they leapfrogged land-based telco. So when you jump into a country that has no existing banking system infrastructure that people are trying to protect, or that's what's utilized, and the technology drops into a greenfield place, well, yes, then the acceleration is quite dramatic.
Mm-hmm.
Yeah, I think that's right. I think what Dan's talking about is a forcing mechanism, right? What is the driver or the thing that creates the impetus, right, to get people to adapt and adopt, right, some kind of a new alternative mechanism for this. And one of the things that has been proposed alongside, I think, what Dan is saying about what's the incumbent baseline, is also, for example, concerns about currency itself, right? So we've seen in some instances in various countries where there have been all of a sudden massive controls or restrictions placed on currency. Those are the kinds of things that will drive the adoption of something along the lines of what Daniel has suggested here, right? Some crypto, et cetera. So it feels easy to think that we won't move in the direction of crypto because we can't really see the rationale for it until all of a sudden there's a massive rationale for it, right? And it's often driven by some kind of either the absence of an infrastructure or a shock, exactly, like some kind of macro shock that happens, or some kind of design shock that happens into the system that will drive a new behavior getting learned quite rapidly.
And the only thing I would add on this is, we're talking about electronic cash or e-cash. I think Dan, you're referring to M-Pesa in Kenya. But look, I would say that we do have some of that in the US. And here's the big distinction, though. It's accounts-based systems, and they can be incredibly useful. So Venmo is kind of an accounts-based electronic cash type system. What I am getting at, though, and Marla, you're just talking about this, is that there is a distinction, though, between an accounts-based system and a true tokenized system. So accounts-based has pros and cons, but you've got certain counterparty risks there. The cash, the money is not money from the central bank, right? So you have a counterparty that's responsible for that money. When you talk about tokenization, I mean, you are literally talking about a central bank liability. It's like a banknote that says this is backed by the full faith and credit of the United States, and you're tokenizing that instrument so you can use it as you would cash, but in a digital context. So I don't think we really have seen that internationally yet. Certainly, we've seen some pretty interesting examples and applications of accounts-based systems.
That is super interesting. Thank you. I just got a note that we have 1 minute left. So I'm wondering if there is any final thoughts that you all want to share? Okay, I'm going to just say quickly, one of the questions I didn't get a chance to ask was just about how you're getting your information in terms of from your users. Again, this is not, you don't have a whole lot of time to answer this, but whether you're actually talking to people on the ground. Interviews, focus groups, folks who are really connecting to figure out what those bottlenecks are, because it's so tempting, I think, in this space to think about the technologies, the systems up here.
Lisa, you kind of hit a nerve with me. I mean, I've only been at Green Dot now for 3 months, but I can remember my days, and that's been, I asked that same question of a very well-known consumer advocate, and the consumer advocate said, well, we can't afford to do focus groups. And it just infuriated me because we do focus groups. We talk to our customers.
Or not to, right?
Walk in their shoes. And so I do think that we can really so easily get stuck in this thinking of like, well, this is the way it should be, but we don't really know how it really is. So yes, at Green Dot, we will be spending much more time walking in the shoes of our customers to understand what problems we really need to solve for them.
That's a great note to end on. And next time we're all in person at Emerge, I totally recommend that folks do. I'm blanking on the name of it, but they have this exercise where you actually take a $20 check and you go out to a neighborhood and you have to cash that check and buy some things and use alternative financial services and really experience what it's like to be on the margins of the consumer financial services system. Let me thank all of you for being here. It's been a great conversation. And thanks to the folks at Emerge for putting us all together. It was really fun.
Thank you.
Thank you, everyone.